Welcome to this panel, which I'm very excited about. I hosted a similar roundtable last year, which caused me to tell huge lies to everyone on this panel, such as you will be scattered around the room and it's a completely different setup. And I'm assuming that they will forgive me in the course of this conversation, which is going to be amazing. Of course, if you have been here before, you know that we invite you to be the conversation. I intend to do virtually no work up here. You're all in charge. But I'm excited to be here. Nevertheless, I'm Molly Wood. I'm the founder of Molly Wood Media. I'm a journalist and investor focused on climate tech solutions. And I'm here with an illustrious panel to talk about the state of and the future of clean tech. And I'm going to allow everybody to just start by, we'll just kind of go down the row here. Please tell me what you're working on. I feel like it's easier to give the face to the name, who you are, what you're working on, and how you got here. Not the airplane,
like the fortune of it.
Yeah, I mean, if you took like a hydrogen-powered airplane here, please tell me that. But how you arrived at what you are doing now. That might be Eric, yes.
All right, hello, I'm Rebecca Boudreaux. I am the president and CEO of Oberon Fuels. So I came here from Hamburg, Germany. And I've spent the last 20 years focused on commercializing new technologies. So I'm a polymer chemist by training. I love molecules. And I really love commercializing molecules. So that's my start. Oberon Fuels, so we've been on an almost 13-year journey of decarbonizing the global propane industry. So most of us probably don't think a whole lot about propane. If you grill for the 4th of July, good chance you use it to grill. Outdoor heaters, you probably use it. But actually over 1 billion people around the world actually use propane as an energy source for cooking, heating, forklifts, on-road transportation. And the propane industry actually produces comparable emissions as the commercial aviation industry. Yet almost no one is doing anything to decarbonize it. And so that's where Oberon comes into play. So we are now commercially producing renewable DME. It's an ingredient you can mix with propane, 20% blend up to 60% reduction in greenhouse gases.
Will you define DME for us?
Yes, dimethyl ether. Yeah, so carbon, oxygen, carbon, some hydrogens on it. And so it handles a lot like propane, similar structure, but has unique properties. And so DME, you mix it with propane, but it's also a great source of renewable hydrogen. So it's very easy, it's very portable, leverages the existing global propane infrastructure to move this molecule and therefore move renewable hydrogen. So that is what we're doing, that's what we're excited about. And then you want us to how we got to this event?
No. Your love of molecules is your origin
okay,
story.
There we go.
Eric, please go ahead.
All right. My name is Eric Allison, and I lead product for Joby Aviation. Joby Aviation is developing an all-electric vertical takeoff and landing aircraft. So it's a 4 passengers, so 4 revenue seats plus a pilot aircraft that can take off like a helicopter, transition and fly like a regular airplane, and then land again like a helicopter. And we think this is really interesting for future mobility because it creates a new opportunity for how you kind of can move about an urban and suburban landscape in a way that's actually zero emissions from the very beginning. The clean technology that has started to transform automotive through EVs and other types of ground mobility is really the foundation of this, that it's kind of baked in from the very beginning. It enables this new type of class of vehicle, basically. And so it's really exciting to see something kind of emerge and be born from this new wave of technology that's starting to sweep across other industries in a more of a replacement fashion. So we've been working on this. The company is about 14 years old, stayed very small for a long time, brought in Toyota as a lead investor back in 2019 and really have started to scale from then. We're hard at work on FAA certification and we're looking to commercialize, start carrying passengers for revenue in 2025. So just around the corner, great partnerships with folks like Uber and Delta on the demand side to actually provide a really valuable service to passengers because we're actually not just building the airplane, we're building the service that goes with it. So we're actually going to operate our own, essentially mini airline, on-demand airline that will incorporate these vehicles and then actually make them available into services like Uber and in partnership with Delta so that anyone can actually access it. So it's not something just for the uber wealthy, pun intended, but rather something you can use on a daily basis. And so it'll be can be integrated more into life that way. We're really excited about the opportunity of changing how people move through this application of clean technology.
Hi, my name is Kim-Mai Cutler. I'm a partner at Initialized Capital. We're an early stage fund with around $3 billion under management, and we do exclusively seed deals. For the last couple of years, I've basically almost exclusively done climate-related investments, including ones in climate adaptation. One of our companies yesterday announced a $17 million round called Pano. They're doing wildfire detection. I've also done other deals in vertical SaaS for solar and carbon dioxide removal. In my previous life, before I was an investor, I was actually a reporter, and I got into the world of political advocacy. I helped put together, one 501c4 advocacy org that has changed about a dozen California state laws over the last 5 years in land use and zoning. And then late last year, another 501c4 that I helped put together called U.S. Megafire Action launched, and it's led by the former head of the California congressional delegation, and he helped ensure that around $2 billion an allocation ended up in the IRA for wildfire management. So I kind of have this mixed background as a journalist, investor, political advocate, and yeah.
Great.
Okay. Hi, my name is Seonghoon. I'm the founder and CEO of a company called Amogy. So Amogy is based in Brooklyn, New York, and Houston, Texas. We are a relatively early stage company, 3 years old, but we've raised total $220 million to date with the investors including Amazon, Aramco, SK, Temasek, Mitsubishi, and a few more. And we just closed a $150 million Series B last month, which we are using to commercialize the technology. And now we have roughly 170 people working together. So Amogy is developing a technology which is converting ammonia to power so that you can use our technology to finally use ammonia as a fuel. So our technology is really targeted for a hard-to-abate sector such as maritime shipping, where simply the battery technology cannot be a solution because of the fundamental limitation like energy density. So maritime shipping and heavy transportation, heavy industry, they have to use liquid fuel with high energy density. So ammonia checks all the boxes in terms of the no carbon contents, high energy density, as well as its affordability given the large-scale production which we are making for the fertilizer. But there has not been really a technology converting ammonia to power effectively, efficiently. So that's the technology that Amogy for the first time introduced to the market. So for the past roughly 3 years, so we demonstrated the ammonia-powered drone, tractor, truck. Now we are building ammonia-powered boat, the world first for the first time in the upstate New York at Hudson River. And yeah, using the new funding, $150 million, now we started making the factory in Houston, Texas. So company is expecting to have the very first commercial product for the maritime vessels in 2024. So very excited to be part of this conversation today.
Fantastic. I have roughly 100 questions about ammonia. I'm gonna let you guys go. I will kick us off if need be, but I have a little bit of housekeeping. This session is on the record, so whatever you say will be on the record. If you have a question, please wait until a microphone comes to you. We have a microphone runner, and because we are also live streaming, we want to make sure that we get every question on that mic. So raise your hand and a microphone will find its way to you. Start raising hands now if you want, and I will kick us off with a question to stall. I have so many questions about the clean tech industry, but can I just have a minute to geek out on ammonia?
Sure.
Why is it so great? Why has it not, tell us more. Why ammonia? And why ammonia versus something like green hydrogen?
So yeah, that's a really good question. So ammonia, first of all, the biggest advantage of the ammonia as a fuel is we have used the ammonia longer than 100 years, mainly as a fertilizer. So because of the existing use cases, there is a longer than 4,000 miles of the pipeline in the United States from the Gulf Coast all the way to the Iowa in Illinois. And there are barges and bunkerings and terminals all available. We've learned how to deal with the ammonia past 100 years. In addition to that, ammonia has probably the highest energy density among the non-carbon fuels. However, again, people have known about it for a while, meaning there has been tries to really convert ammonia to power, which has not been efficient because ammonia is not really a great combustion fuel. So we've developed a different technology, which is cracking ammonia to hydrogen using the produced hydrogen spontaneously into the fuel cell so that you can finally use ammonia as a fuel. That's the technology we developed. Mm-hmm. So compared to the green hydrogen, so we are essentially using, ammonia as a hydrogen carrier. So hydrogen is a great fuel. From our perspective, hydrogen has to be used at the place where it's produced. But moving around the hydrogen is inefficient and expensive. That's why we pay like the $20 for hydrogen per kilogram at the fueling station, while the production is only $3. But you can overcome that by using liquid fuel ammonia, where ammonia can be liquid at room temperature, existing infrastructure, and the protocols and safeties in place. So we are enabling that by using our technology.
Perfect. that leads me to a broader question while we warm up our audience here, which is where do we see this industry, and where do we see, I think let's start with adoption. I feel like this is sort of the perfect, because I think one of the things that happens and one of the things that presents a challenge for venture when it comes to investing in these hard to change industries or industries at massive scale is that the existence of a technology does not ensure its adoption. So go. We can just run back down, actually. Rebecca, I'll start with you.
Well, it's interesting because Eric and I were talking beforehand about the role of regulations in current policy in technology adoption. So someone frankly asked me a couple months ago, so what have you been doing for almost 13 years? I was like, well, actually, in some ways, the technology is the easiest part. For the most part, molecules do what you tell them to do, and when you engineer, there's a pathway to do it, and there are certain principles. But when it comes to regulations and policy, and you involve humans and politicians and regulators, they don't always follow what you want them to do. And policy is written, and the regulations are written for what's here and now, not for the future. And so when you come in, one thing we were discussing, and Eric can build on it, is on the definitions. Regulations define something, and they define it based on what's here and now, a hydrocarbon or something like that. And instead of saying, well, we just want something that has a reduction in greenhouse gas or a certain carbon intensity versus picking molecules and things like that. So in addition to technology commercialization, it's about the regulatory development and also the market development and acceptance of industries, frankly, recognizing they have a problem. And it's very difficult to turn the tide. Over time, it can happen, but it takes a long time.
So for what we're doing, we really spent a lot of time actually in different contexts. Before I was at Joby, I was at Uber, and I ran the Elevate team there, which really the whole mission of that team was to understand and think about the productization of this technology. And so what is the use case that actually can scale? How can people use this? How can it make people's life better, not just on a small scale basis, but on a large scale basis? And so there's a great convergence. Joby acquired the Elevate team a couple years ago, and we were able to bring all the work that we did over to Joby and really drive even harder in that direction. So because certification of an aircraft, which is a necessary step to bring any aviation-related product to market in a commercial sense, is difficult. It's by design, it is a very arduous process, but you appreciate that every time you get on an airliner and you fly somewhere. And so we're hard at work on that. We've got 1,500 people plus who are hard at work on that aspect of it. But we also wanted to be really sure that what we're doing, we think has the right characteristics, the right kind of mission profile to actually be a successful product. We have work to do still. Like I said, we're hoping to launch and commercialize in 25. But we did a lot of work up front to try to understand demand patterns, movement patterns, like how people are moving through cities today. Where is there potentially latent demand? Things like that we actually can say, okay, we've got the right characteristics, whether or not it's the speed, the payload, the range, and importantly, the acoustic signature of these aircraft to actually open up this new type of market in short-range aerial transportation that we think is really essential. It's not just build the technology and throw it out there, because the amount of work to throw it out there is very large. So you want to actually make sure you understand at least some aspects of the market and how people are acting in similar situations before embarking on the journey of actually bringing this to market.
There's also, before we continue, there's also the question of do people want to do it? If Joby were available in your town, just Eric, close your eyes, raise your hand. Would you be thrilled to use this, excited to use this? Okay. So we have so if we assume that anybody in LA will do it.
We've done
Most
surveys,
people in
so
New York
actually,
will do it. All of us in Oakland will do it every time we have to go to the city. Yes, absolutely. Yeah. Okay. So consumer adoption, but you can see people are like, well, I mean, I'll try it, and this is a positive room.
Yep.
I would say as investors, we have to be pretty disciplined in the current market environment, and so we are always looking for signals around traction and customer adoption. I think that if you're a company with like a huge pipeline and a lot of inbound interest, that's a company that we're very interested in. For example, when we did Pano in early last year, the customers that they're selling to, insurance industry, private landowners, local governments. These are typically customers that in a normal world you think would be kind of slow or hard to sell to or kind of bureaucratic. But what we found is that's absolutely not the case, because their land is literally burning down. So the reason that this company was able to raise an opportunistic round about a year after we did the initial check is they're able to sell a lot. I mean, and then that's just the reality of the current the current fundraising market. If you have the numbers and you can grow, you can raise, and as investors we have to be incredibly mindful of that.
Yeah. Seonghoon, I feel like a big part of your value proposition is, I think of this generally as workflow, which is a shorthand for can you fit into an existing structure, which will make your adoption much easier. And it sounds like that is in fact the unlock for anybody that you want to invest in and for the product that you're building. Yeah.
That's right. I mean, I like the question because there are so many technologies available, but the existence of technology doesn't mean that the technology can solve the problem in the market. Because from our experiences and perspective, technology is the first thing, but it has to be scalable, and then the scaled technology has to be manufacturable at the lower cost. So the part of the reason why Amogy was able to raise large funding in such a short period of time was that our very initial demonstration was at the 5 kilowatt scale drone less than 2 years ago, August 2021. Then we demonstrated 300 kilowatt scale semi-truck early this year, like the 60x scale up within less than 24 months, which gave the confidence to the investors and broader community and the market partners about our scalability. And then, of course, we are still going through the scale because we are building the megawatt scale both right now, but we have much larger confidence today. But now we are going to the next question, next challenge, which is the manufacturability, really the manufacturing new scale technology at the competitive cost, which we will go through. We have a large confidence on that as well.
I see hands coming up. In fact, I have had a sneak peek of this question, so I'm going to let Tess ask instead of me.
Molly, you blew my cover. But building off of Molly's question, as a deep tech venture investor that wants nothing more to invest in climate tech and is terrified because of the $25 billion lost in 2011 from Cleantech 1.0, like what is different now? And Rebecca, you answered. It's regulation and Fortune X 100 companies that have a carbon neutral initiative by 2030. But when 2030 comes around, like, what's going to happen to the industry? I worry a lot of these companies are feeling good, or a lot of these investors, Kim and I, are feeling good because we're investing in impact and good for the world. But as venture investors, we got to make a lot of money really quickly. So is that getting lost in this feeling good narrative of climate tech?
It's an interesting question. So, just to give an example of our journey, so we haven't had venture funding. We've been funded by strategics. And our largest shareholder is not who you would guess. It is an executive from the midstream oil and gas industry. And he wasn't looking at it from a climate perspective. He was looking at the challenges he had on the transportation side, because he has a huge fleet of 400 Class 8 trucks. And he had tried other alternative fuels, and they frankly didn't work in what he was doing. And so we've been funded by people very close to industry. So he on the transport, oil, midstream oil and gas. Our other big shareholder, Suburban Propane, the third largest propane company in the world. And they're now blending our product and sell it in Southern California. And so for us, venture wasn't interested, but by going to strategics who could help us in building our product, bring it to market, and change the dynamics on the market development was really key for us.
I'd say similarly, we've really worked to, we have a lot of fantastic investors, but also strategics. I mean, Toyota is led our Series C, and it's a mobility play that we're focusing on mobility that happens to be built out of clean tech, but fundamentally it's about mobility that we're trying to do, and then we did a SPAC in 2021 and brought in a significant amount of additional capital, and then I've done a few more strategic investments. One just announced recently, a couple weeks ago, to just further the work that we're doing. But the investors that we've brought on understand what it is that we're doing, and that there's a lot of work that we have to do to bring it to market. But that we think that the potential is pretty amazing once we do that.
I would say that the vast majority of deals I've done in this space have metrics that are attractive to generalist investors. And so, I mean, the last company that I did has very attractive SaaS metrics. And I mean, we have, because we're an earlier stage investor, we have done, a few deals that are that do have more technical risk. But, we looked at the emergence of new markets at the time. We were looking at, we did do one CDR deal, and the reason that we did it, we were very interested in what Stripe had done with the Frontier voluntary buying program. And then there's also legislation operating in parallel to that some of the policy folks from those companies are doing in terms of making that transition to the compliance market in California. But I would say for most of the companies we're doing, they could raise from a generalist follow-on fund. And I would also say Bessemer did write a very helpful post on this about a year ago with like 4 ways that the current market is different from. I did read an essay of yours. I don't know if it was yours specific, but it was your team's.
Yeah, I mean, I agree with and echo everything that's been already discussed over here. So especially on the strategic front, I mean, Amogy, our largest shareholder is VC, but we have a bunch of strategics, including Amazon, Aramco, and many more, as I mentioned. But they are important, especially in this market environment, as the strategies can be a little bit less sensitive to the valuation itself. But at the same time, we see, the strategics investment as an opportunity, really opening the door to the collaboration with them, because all this energy transition and decarbonization has to be done throughout the collaboration with the incumbent technology companies, like large companies out there. So, investment from a company like Amazon or Mitsubishi, for example, really opened up the collaboration opportunity with them, which has been driving it further and also giving the confidence to the customer. So, of course, the next 12 months or so, or even longer, the market environment is not going to be looking great, but at the same time, strategics will have an important role to really letting the companies like ours to go through the challenges.
Yeah, I do. I think we have a question back there, and then I do want to keep digging into this idea of appropriateness in terms of sort of funding and segment.
And not so much a question, just a response to your question. And having been in this field for 30 years and have gone through Cleantech 1.0, 2.0, now we're in 3.0, what I've observed is a considerable amount of de-risking that has occurred since Cleantech 2.0. 1.0 went off a cliff with the GFC. 2.0 had huge steroids on it from the Obama administration. And then 3.0 is really helping to drive it toward the reality. And the de-risking events that have come out of the past 15 years are the regulatory drivers, consumer demand, the rise of ESG, despite the anti-woke movement, and the considerable amount of capital that is now behind this effort. With any one president would have been happy to get CHIPS, infra, or IRA through. He got all 3. And that's the equivalent of $4 trillion, 4 times more than the Roosevelt New Deal. Just the DOE's office for Loan Program Office itself is $400 billion. That's $2 trillion leveraged.
Yeah.
And the final component that has really helped to drive and increase the velocity of this to scale that we didn't have 15 years ago, but we did in California under AB 32, then SB 100, is the pricing of carbon. And being able to embed that into the IRR and our MOIC as a result of now having a floor of economics within carbon. And everything that y'all are doing is affecting and adjusting that price on a daily basis. What Al Gore was describing yesterday, I think, is very central. And in fact, it's probably more central to all of the conversations going on at Fortune this year, because of the severity. What's going on in the Northeast, in Canada, and the Southwest are driving this conversation to a reality that isn't going to be saved by the nonprofits. It's going to be saved by generating alpha while creating a better future for our children. But it's a de-risking of the economics that, quite frankly, the fossil fuels industry has had. They get 42 times more tax credits, subsidies, and support than renewables to this day, and they've had that for 120 years.
Molly, do you mind if I make one more comment?
No, please. I was going to ask you to please respond to that. Yeah.
And what's interesting when you
Also,
bring.
I'm not in charge here.
You're not in charge? Oh, okay.
I'm in charge if you go on too long.
Well, and your comment on de-risking, and again, back to the question of what's different. What's interesting is that 3 of us sitting up here are all about leveraging current infrastructure. And I think in the past, there's been a lot of something completely new, ignoring what has worked for a very long time. And so for us, we're trying to leverage this global propane infrastructure, the tanks, the trucks, the 4 million people who work in this industry to move lower carbon products and move new molecules. And I think that's something, it's interesting that, how you're working ammonia is moved all the time. And by the way, we might have some ammonia that we can work together on. But, and then, thinking about the aviation industry and all that. So it's interesting that it's now turning more about how do we leverage what we have? Why are we trying to throw this all away? Let's leverage what we have, including the workforce that knows how to move molecules and knows logistics to do something that just has lower carbon.
100% agree, yeah.
And I think also building on the building blocks that have been demonstrated to work. So when I first got into the electric aviation industry 13 plus years ago, the Uber wasn't a thing. Like no one booked rides on their phone. The iPhone wasn't a thing, right? I mean, maybe it was barely a thing. And so the rise of a new way of thinking about mobility on a daily basis, combined with then the hard technology of electric propulsion, the appropriately energy-dense battery systems that have the safety profiles, and putting that all together into novel architectures. Both of those things are actually really important, and you bring them together, and then it's actually you can build on top of that, and that didn't exist, a decade ago.
I do want to keep digging into this idea of strategic investors. I do think, like Kim-Mai, this has been a very interesting kind of bubbling conversation about what is venture appropriate. And you see this almost kind of purity test among climate investors. Some are saying if you're investing in software, you're a coward and you're gonna have, terrible returns. And then you have investors saying, hey man, that's appropriate for venture, right? That dollars that do need to invest in some de-risking or that involve a path to commercialization that might take a long time, maybe shouldn't come from this industry. What do you think about that?
I think when we're approaching this space as a firm, we are walking a fine line. There's things that we want to do that are more frontier, that involve more technical risk. At the same time, we have companies going out to market every month, and we can see the activity from what is and isn't being funded, and we have to factor that all into this one kind of system or equation to kind of figure out what is investable going forward. And so in the world of in the ecosystem of climate investment, you see some of the purist firms that you're talking about, and I totally agree with software software alone is obviously not sufficient. There's a lot of hard tech, capital intensive companies that need to be funded. But you'll see generalist investors focus more on the more software centric companies, and then you see climate focused funds doing more of the hard tech R&D companies, and then you see some we have some investments that kind of sit in the middle of those, but it's a hard balance to walk. And everyone who's in the space, if you're thinking about companies like some of the businesses these founders are building, it's a long pathway to deployment and to commercialization, and you have to be thinking about how do we capitalize this company over a decade, or longer.
Right. Eric, I know that we talked a little bit about this yesterday. You sort of intentionally stayed small because there is this, especially in this moment that we were in, where it was sort of like climate tech we're just going to throw money at you and the valuations are going to be absurd, but so will the expectations for your revenue. And it sounds like you have managed to walk that line, and then I want to go to the rest of the panel about how you're thinking about, wouldn't it be great to get a huge check and an absurd valuation? Maybe not.
Yeah, there was a lot of technology development that we did early on to de-risk, and both understand the fundamentals of the technology and also understand the right way to put it together. Airplanes are kind of they're interesting for a lot of reasons, but I think anyway. But they are essentially kind of they're by their very nature systems. They're systems of systems, and so you can put together systems in different ways to do different missions. And really understanding the mission that an airplane needs to do is critical. to being successful. And so it's kind of like what called product in some sense. And so Joby spent a long time understanding both the fundamentals of the technology and then the constraints applied by those fundamentals to what you could do in putting together systems. And it was after kind of that moved around and different concepts were tried out and kept it small and kept the team pretty focused. Kind of settled on what we thought was the right idea, which then has, I think, turned out to be, other people have agreed with us. Well, we have a lot of work to do still, like I said, but that kind of settled on the basic characteristics of looking at something that has enough revenue seats that you can actually do a mission, something that actually has the right acoustic profile, that you can actually, people aren't going to oppose you, at least in the same way that they oppose helicopters coming in and out of areas, which are, they are the only vertical takeoff and landing vehicles that exist today. And you can fly around in helicopters in New York if you want to, as one of the places. It's just they create a lot of disruption. And they have high operating costs. So if you can put technology together in the right way for the right mission with the right idea, that's where it starts to get interesting, and that's kind of what we did. And so, and at that point, that's when the bigger investments came in, and we actually started to scale then, because we understood the fundamentals and had a pretty good sense of what the challenges were and what it was going to take to get to bringing it to market.
Hi, everyone. This is super fascinating. I'm learning a lot today. I'm Ann Schraders with Fortune. I had a question kind of going back to the strategic versus VC angle. I'm curious to hear from you who have companies, what's sort of the calculus behind who you choose as investment partners in terms of strategic versus VC? And I guess on the VC side, what's the value proposition for accepting a check from you versus someone else?
So yeah, from our perspective, raising the fund, so this company and this kind of technology is going to require massive amount of investment until we actually see the mass revenue generation or even profitability. So we have been really navigating the conversation with the strategy to really identify the investors who has a the long-term view, not just the 5 years of the financial return, instead of really the 2030, 2040, finding their businesses being together with us. So, strategics in particular, we have, for example, Amazon, Aramco, and Mitsubishi, all of them have committed $1 billion or $1.5 billion, also $2 billion of the funding dedicated for next 20 to 30 years. So that has been really giving us the confidence, really the investor and the company fit, and that's been really successful from our perspective.
As far as the calculus, venture capital wasn't interested in what we were doing. We were coming at a time where many venture capitalists had been burned. And then as you see, we've been at this 13 years. So if you think about the venture timeline of their investment funds, it wasn't the right timeline. Introducing a new fuel, it doesn't happen very often. And quite capital intensive business. And so when talking with venture capitalists, they say, if you have strategics, keep going. Those are the right investors for you. And they have been. And as we go to our next capital raise for our next production facility, and it's also to continue to scale the company, we really are looking at strategics. And now we're starting to get more in the infra funds that go a little earlier stage. But being as capital intensive in such a long time frame, as you were mentioning, Kim, we were really teed up for strategics.
Yeah, I would say, independent of climate, historically, and this is even before this investment wave, in general, founders that have been able to, it's been preferable to raise from, well-known first-tier venture funds over strategics and then bring in strategics later, oftentimes because, the arrangement can be less clean or there might be weird terms attached or something like that. That said, we do have companies in the portfolio that do bring in strategics because it makes a lot of sense for, if you're doing something that's capital intensive or hardware intensive and you need some, benefits around distribution or setting up complex pieces of hardware or something we've had companies bring in strategics a little bit earlier. For seed companies, what I would say is, for the earliest stage of company where we come in, where it's just the founder and maybe one or two other employees, that's the stage we specialize in. That's the stage we've done for the last 10 years. And we're so familiar with how to navigate the founder relationships, the first employee hiring, the launch, the go-to-market. And so we just know how to do that particular piece of a company's life very well. And then in addition to that, I have this kind of regulatory policy background. So with Pano, it helps that she's building, Sonia Kastner, who's the solo founder of that company, she's building, a full stack hardware software product to help manage like wildfire detection across high risk areas. And at the same time, I'm on the board of the 501c4 that I helped found around ending megafires that is, advocating for more federal spending on wildfire management. And so there's obviously a lot of benefit and crossover there. So, I mean, that's what I'm trying to bring to the table to, the different companies that I'm working with.
Other questions, Barrett?
Thank you. Conversation is really fascinating. I'm curious, you all are doing such incredible work, and you're also clearly all very curious people. What solutions outside of what you're working on or that you've founded or that you've invested in are you most excited about?
Starting from myself, I'm most excited about the electric aviation, to be honest, because I flew here from Brooklyn this morning, and I fly because most of the founders are flying a lot to meet the investors and partners, but the aviation industry today is using 100% of hydrocarbon, but we have exciting technologies coming up like Joby and other hydrogen aviation companies as well. Mm-hmm. So that's the area where I'm most excited about personally.
I was really interested yesterday when we were talking about AI, because I've been thinking about how does that, with what we're doing at Oberon, how do we incorporate AI? But the conversation was around, someone brought up on the circular economy of it, right? So you need an enormous amount of computing power, needs an enormous amount of energy. So how do we utilize waste and the CO2 output and all these different things, recycle the water? And so like thinking about just the circular economy in general, whether it's the challenges of the fast fashion industry or whether it's computing, all of that area to me is very fascinating.
I'm particularly interested in the synergies between like these different kind of strains of investment. So I've often described it as if you take kind of the silicon carbide MOSFET technology is driven from solar inverters to some degree years ago. And that's now one of the foundational technologies for electric vehicles, whether or not it's cars or electric airplanes, because high efficiency inverters are incredibly important when every electron matters, that you're trying to use a pretty bad energy source when it comes to energy density, which is batteries, relative to hydrocarbons anyway, and make something work. Now, there's so many other benefits that it's worth the challenge, but you really have to drive efficiency. And so it's really interesting to me how you see those synergies, and then what's the next wave of that? So we're certifying an aircraft it's fly-by-wire. It's a very integrated system with kind of new designs of technologies to make that possible. Big batteries that are aviation appropriate in both the design of everything from the cell up to the entire integrated system, electric motors, lots of redundancy. So all of these pieces, these fundamental foundational components, including the control scheme itself of the aircraft, and that's a lot of work. We're doing a lot of very, very detailed work to make that possible. But then you start to think about, okay, well, what comes after that? So now you have this stable of certified technologies, and so we think that there's a number of interesting directions where that goes. Like batteries will keep getting better. So there's a kind of this slow creeping improvement in energy density on a year-by-year basis, and maybe it'll hit a wall, and then new technology comes in that kind of opens up the next step function. Usually it's not huge, but enough to keep it going. And so that will actually, certifying a new battery and putting it into one of these airplanes is relatively simple compared to doing the whole thing. And so we can extend the addressable market essentially through that. But then there's another wave of technology we think is coming, which is hydrogen, and how that is applied to aviation. And so we purchased a small company a couple years ago in Germany that's doing hydrogen fuel cell integration for hydrogen electric aircraft. And that is all the same constituent technologies. So again, it's kind of, this idea of building on the pieces that you have to put together in a new way, and that opens up a new market then. You can make a hydrogen electric version of the VTOL that extends the range from 100, 150 miles to maybe 300 miles or 400 miles. And now you start to be able to do point-to-point, zero-emission regional travel on demand. And that's pretty interesting, as like things that come down the line. So I think that the way these pieces build on each other over time is particularly interesting to me.
In addition to what you've both said about aviation, I think the one thing that hasn't been mentioned so far is decarbonizing construction and buildings. And there's a lot of interesting conversations happening between carbon dioxide removal companies and how to use the byproduct in like concrete production to help decarbonize like what is historically a hard to abate industry.
Love it. I see a question back here.
Hello. I'm going to ask 2 questions. I don't know if that's kosher or not, but I'm going to.
See, this is where I am in charge. So we'll
I feel like I can break the rules. Why
Go
not?
for it.
So my first question is in regards to each of you. Question 1 of 2 is you've talked already a little bit about the green flags when it comes to sustainability and obviously everything you're doing in your company. I'm curious to know, what are the red flags from even an investing standpoint of things that signal to you like this might not be, completely reputable? There's some questions around this, like something that might say to you, this might not be what they're saying this is. And then the second part is from probably a marketing / sales perspective, depending on, what side of business you're working on. What have been some of the biggest challenges as of late with consumers and in service of talking about your product and getting them on board outside of just some of the initial sustainability or like effectiveness concerns that kind of surround it?
Great. Why don't we do the first question first, which is, again, what are some of the red flags that say, for example, this might not be able to scale, and maybe in the case of the companies, that is, what are your risk factors?
I guess, one of the things that you see in the most recent wave of teams, and this is actually very good in general, is you might see pairings of someone who is like a deep technical or industry expert with someone who has more of like a venture-backed product or business or ops background, and then they pair together. And in general, I would say this is awesome that this is happening, and a lot of teams are doing it. But I think as an investor, you're always trying to explore the cultural relationship, the relationship between people who come from 2 very different worlds. Can they work together? Can they not work together? So that's, I see that pattern over and over again. And you're just kind of teasing out, how long have you actually worked together? How do you navigate disagreements and that kind of stuff? That's one. I think the other is particularly like as an early stage investor, we just see a breadth or a range of lots of different. The industry is just so broad. Like you look at this panel, and everyone's got this like deep T shape where they're a world-class expert in ammonium. And so like going to an investing team and trying to figure out, can you diligence, this scale or range of companies or ideas or products? You have to do a lot of homework and talking to experts, and you have to find them out, and or actually hire them on your team and have a big, a lot of climate-focused funds have a big team of scientists as well. And so I think that's a huge challenge as an investor too.
I'll jump in quickly on the investing side and say another big red flag I think that's really important that's come up a lot here is the question of regulation, right? That there are so many founders who dramatically underestimate what regulatory hurdles that it's going to have to be, whether it's putting chargers on light posts or FINRA certification because you want to crowdfund to fund renewable energy projects, and it's my number one.
I'd say in aviation, like that was exactly what I was going to say. That if someone is trying to raise money and then they don't understand or even can converse like intelligently about the regulation, it is a very highly regulated space, and it's going to stay a very highly regulated space. It's just the reality. And so understanding that and actually like understanding the regulations deeply in a way to like actually comply with things and do it in a new way with new technology, or just do it faster. That's kind of the key questions. I think a lot of people in this space that started, like 10 plus years ago, made kind of that mistake early on. It was like, oh, we can like disrupt the regulations. Like, not really. So you have to understand it and work with it.
And Rebecca, you were saying that federal is easy and state by state is the nightmare.
I think it's like the opposite.
It depends on
or the opposite,
industry, right?
depending.
Depends on the industry.
Exactly.
And what's interesting is, because this does tie to regulations, it's also teams that are willing to embrace the unknown and call the question. So for example, when we started at Oberon over 10 years ago, so none of us were from the energy space. And so we had a technology, there were no regulations in place for us to do what we wanted to commercialize DME, and there was no market for it at the time. And so we had to embrace the regulations. So we approached the state of California, we're like, hi, we have this new molecule. We don't know how to legally sell it in California, so can you help us out? And so we're talking to the California Air Resources Board, and they said, well, actually, we don't know what to do because we haven't certified a new fuel since 1992, but we'll help you develop a pathway. And so we worked hand in hand with them. So we really had to roll up our sleeves, but we also had to be brave enough to approach them, not to skirt the regulators, but to embrace it and help be part of the change. So I think having teams who are willing to say, hi, we don't know this, we're going to go talk directly to the regulators or bring in experts from oil and gas or wherever, deep logistics expertise, I think it's very important.
Yeah, I agree with that. I mean, in addition to the regulations, from the company building perspective, going through the permittings and building out the facility for the large scale the project is also pretty challenging for a company like ours. Because I mean, we were initially bringing in the ammonia next to the Manhattan, and dealing with the FDNI was taking longer than about a year. So those kind of the unforeseen challenges are still difficult. But in addition to that, if we're looking at the market, especially the industry that we are in, such as maritime industry or the power generation, the sense of urgency is still lacking, I would say, because I mean, these large assets like the vessels, maritime vessels, they live on the water longer than 25 to 30 years. So if they are really willing to reach 2050 net zero, then all these assets has to be equipped with a zero emission solution essentially from 2025. So that sense of urgency is not really there yet, which is still a pretty challenging situation for us. Yeah.
That kind of gets to, I think, part two of that question, which is what is the kind of, I would call it, actually, it's somewhat self-serving because I advise on this, but the storytelling challenge around getting to that urgency and getting that adoption. And I wonder how each of you is approaching that as well. And even internally, we'll talk about generalist funds and the storytelling that has to happen there as well.
I mean, getting back to this regulatory question, I think the thing that is, so policy change, systemic change, things happen very slowly for a long time, and then they happen all at once. And so you're kind of like chipping away at this block or wall for like 10 years, and then suddenly it just sort of shatters, right? So, you know, when I was doing land use stuff starting almost 10 years ago, like, and this is, you know, I was very concerned with like affordability in California and in the Bay Area. And like the stuff that we were talking about at that time, like single family zoning is very exclusionary, blah, 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 blah. Those were kind of radical talking points like 10 years ago, but then there was like a whole political movement that happened around it. And then all of a sudden in the last 5 years, it's like consistently, you know, I think the last session was like 40 plus bills on housing. It just happened all at once, and it was just kind of crazy because you have to create an idea, and then you kind of have to repeat it over and over again, like 10 times a day, and then you have to build a movement, and then you have to build a following of people who also repeat it 10 times a day, and then it sort of takes on a whole life of its own, and then people who are in elected office can't ignore it anymore, and then there's also demographic and generational change as the voter body starts to shift over, and new voters come into the population, and older voters pass away, and then it becomes top of mind and unavoidable for people who are in elected office. And suddenly they have to do something about it. And then at the same time, in the organizing side, you know, a lot of people, you know, they come into advocacy or activism and they're like, this is such a problem, I want the government to fix it. But they don't necessarily realize that you have to take the idea, you have to put it out there, you have to go through the whole kind of mess of like figuring out who all the constituencies are who would have some ostensible problem about it. And then you have to like go and navigate all their concerns, check them off, and then you have to bring the package to the like final signatory or the people who are at the highest point in that whatever body you're dealing with, whether it's legislative or agency, and you've got to hand them the like perfect thing that makes them look awesome, and like they did their job even though you did their job, and then they'll sign off on it, and then you know, then you win. But like you got to do all that first. But like there are a lot of people along the way who are generally pretty earnest and want to help you, but you got to have to navigate all these different little holes or blocks.
I love Kim-Mai with the literal policy playbook. I only have 5 minutes left, so I'm going to let the rest of the panelists answer that question.
Sure.
If you want to, otherwise I can take one more.
Well, on the sales and marketing front, education's been a huge piece of it for us. So for over 12 years, I've traveled around. Usually I have my DME molecule with me. And I've had to educate, and people start sweating because they're like a good flashback to high school chemistry class or something. But it was
mad that you don't have your molecule right now.
I know. My son took my last one and
love a
hid
prop.
it in his room.
Kids.
Yeah. I used to worry he was going to choke on the hydrogen because they were little pieces, but he's fine now. But education's been a huge piece of it, and being patient about it, because things don't turn over overnight, and you really never know a lot of times the educational part, like when, as Kim was saying, you keep chipping away, and all of a sudden it finally breaks. As one example, I know the LPG industry, propane industry, we're trying to help them decarbonize. Until 2020, they would not even let me speak at one of their conferences. I would go to the World Association. Not surprising, I don't really look like them either. So it's quite an interesting industry, but they wouldn't let me speak at a conference. They're like, oh, yeah, this DME thing, yeah. But public policy shifted, and they're starting to get banned. And particularly the companies in Europe were like, oh, this is an existential threat. Either we change or we're going to be out of business in a decade. And so they are starting to drive some, but there's still a lot of resistance. But again, it's the education, just going chipping away at it, that's been key for us.
Yeah, incredible. Any closing thoughts from Eric or Seonghoon?
I think that our experience has been very similar
Yeah.
to that.
Same for us
Everything
as well,
you
yeah.
said, yeah. That the power of storytelling though is immense, and being able to, a bunch of us. Anyway, there's a few companies in the early years, one of which I was very intimately involved in, that was very quiet in the early years of the eVTOL electric aviation thing, and then I think it was eye-opening for a lot of people when we started to do better storytelling, like largely through the work that Uber Elevate did, but to really put out like a coherent vision of like, okay, here's how this actually works. It's not just a build it and they will come. It's not just a bunch of engineers playing with toys in a garage or something, but rather like, here's actually how this could impact your life. Yes, there's a lot of work, and here's a bunch of things that have to be true, and like barriers that have to be knocked down across different technologies, but there's a story here. And it can be pretty compelling when you put it together in the right way.
Yeah.
And I think that the difference from the first time I met with the FAA it was 2012 in one of their field offices, and got a little video of one of the tests that we were doing with a big white electric airplane flying, and they kind of like had this quizzical look, and they're like, "Why are you guys here?" And to having the whole kind of what's now called AAM, which is because everyone wants to be part of this, but the advanced air mobility idea of this new generations of technology coming into aviation being one of the priority programs with like weekly top level executive stand-ups in the FAA administrator's office looking at these programs. It's quite incredible to see that march through time.
Yeah. Unfortunately, I have to stop us there. I'm so sorry, but everybody should swarm Seonghoon to get his last thoughts. And incredibly, as smart as you have been made already today, there is much more to come. So we'll see you in the main tent.